Today is the 23rd of January. So let's see what the crypto market looks like. Because it looks a bit red. So should we be worried? So Bitcoin is settling right now around the 101, 102,000 mark. It's gone all the way up to and tested the $106,000 resistance level, which seems like a pretty strong one. But a second test is usually a good sign. What this will most probably come and try and do is probably try and test this 21-day EMA. That's going to be an area of key support for this coin. Let's see where it goes from there. So why is the market red? All of this red in the market currently is because of the rumors on Friday that the Japanese central bank is going to increase its interest rates. That previously caused something called the carry trade to fall off, which was in essence low interest rates in Japan being borrowed money and taken to another country such as the US to buy assets that bring a larger return. Now there are fears that this may happen again, so there's a level of de-risking happening. This NI225 is the Nikkei stock market exchange. It's in essence their S&P 500 type of aspect. It's their main stocks in Japan. Now, if we look at the analysis here and we see that big red wick, that was a previous carry trade drop off. Now, if we look now, it doesn't seem to have the same effect. In fact, there's been quite a strong recovery after that announcement has been made. Now, it's still key to see what their announcement will be. We hope for what is expected, and actually what is under expected would be the best bet, and that would cause a massive rally in the market. But as you can imagine, people are not too sure and a bit risk averse because of what happened last time. But currently on this graph of the NI225, it looks pretty good. It seems to be reclaiming a certain local level, and it looks like it's going up, which is a good sign, and that could be a nice continuation for all markets, including risk on assets, which include Bitcoin and crypto. We look at the S&P 500, SPX is the ticker for that on your trading view. We see that there isn't any weakness in the stock market. It looks strong. It's broken a really key trend line, and you see continuation up. If we start seeing this moving back down and breaking back down underneath this trend line, that is a time to start to worry about all risk on assets such as crypto. We further look at the DXY. We've seen this multi-year trend line. We've seen it's been followed and it has broken underneath, and it's settling underneath the 21-day EMA. All of this stuff is good sign for continuation for money to go back into risk on assets. The key area of support here where we marked and it has hit absolutely perfectly is still a level of support. We would need that to break under, and preferably to break underneath the 55-day EMA, and that continuation will bode very well for risk on assets, altcoins, and all of the crypto market. If we look at Bitcoin in the monthly, which is a key indication of where we are right now and what could potentially happen, I like to give the downside and the upside so you can have an informed decision. If things do turn out to be bad, a lot worse than what you think it's going to be, we see a key level of support for this where we have marked it absolutely perfectly in previous runs around the 87 to 89 mark. That would be absolute worst case scenario, and I would expect that if it does go there, which I don't think it will, but if it does go there, absolute worst case scenario, then that area would need to hold, and it would only start to get really crazy if it starts breaking below that, and that could be very, very worrying because there aren't many levels of support in between these two EMAs, and that could cause a massive runoff. I'm not saying it's going to happen. I'm just giving you all the aspects. Now, what is a great thing to do is if, for example, if it comes in within expectation, and if it comes in below this, Bitcoin, I would say, would try to rally above the 105, 106 level. And if it gains that support, there will be extreme continuation from that moment. Let's see where it happens. But I still believe that the market has really baked this into its calculations. So my final thoughts on this factor. Yes, things are red at the moment. There's a bit of de-risking happening. Alts are not doing very good. Bitcoin is having a bit of a retrace. But understand this, we have created a higher high in Bitcoin. As we see here, what we need to now do is create a higher low, and that will be a really nice continuation of this trend. Let's see what happens on Friday. I still think it's just temporary. All of this is just a de-risking over an event that happened in the past, and those fears are still there. But the thing is, previously, it was a shock. People didn't really expect what to happen. Now it's expected. So let's see where it goes. I think it's going to be a positive event, and I think it could be the real continuation of this economy moving forward. Anyway, I'm Alvarez, a seven-figure crypto investor. Like, follow, share, and I will catch you guys later. Peace.